kind of size you're holding. And I couldn't honestly work out the size correctly here. Okay, so anyway, entrance would give you want to do this. Okay, I noted that the issue moves very slowly downwards and very quickly upward. It's like it's trying to settle the score when it's moving upwards. So let's okay, so this is 15 minutes and we just did about 352 and we're bouncing up now. We did 350.87. Okay, alright. We could still have a correction, so you would of course want to fill partially, like if you're interested in filling nickel at this level. Okay. Okay. We were doing 348, not 252. We could wait again. Let's take a look. You'll know that on the 15 minutes, momentum is just about beginning to turn positive. There still could be another wave 5 bounce, so we would wait at 348. This is on momentum, what they call a zigzag, and you can still see continuation lower before left correction or in the downtrend. The zigzags show you this. Okay, we're still having negative momentum, of course, on the hourly, so we will stay put where we are at 348, and we may even expect to see 338 and 339. Okay, so we take an entries as they come. Of course, the market is correcting itself, meaning consolidating its price zones. Those leader candle, okay, then you would expect to see correction of this gap that opened this week before you see another fall again to test 348 and 345, and we have to be patient. So long as this is continuous, negative momentum, we'll stay put at our entry level, at least until you see positivity on the 15-minute frame. Right. Our next issue should be copper. Yes, that's it. Yeah. Okay, so with copper, it is the same. Of course, all commodities go down together because gold and silver are correcting or are depreciating in price. You would expect all the other metals to depreciate too. It's herd action, but they call it like herd action. Okay, so copper, the important thing to remember is that we have a translation line here. This is of course the long-term technical picture, and we believe the market also did the wave 5 terminated here. Like I said, this is the 3 and this is the 5. Okay, in this kind of structure, this could be a 5 wave in a higher degree 3 wave, but we have no means of knowing this is true or not because we go to that to the 60s and so on. Anyway, for trading purposes, this is a degree 5 and we'd expect a complicated correction. This is the market trend now, it's correcting. Okay, above 38.2% of that degree 5 because it's a bullish market, because the dollar is depreciating and gold is going up and all metals will be going up. So we expect this correction always at 38.2%, this level shown here at 1.98, okay, 38.2%, and this is very true, bounced here, okay, and after this bounce here, we have a cyclic translation line that we have segregated onto the 4-hour chart. You look at that now, and that line runs here, right about exactly here on the weekly chart. Okay, so we do not even expect to fall below this shoulder, maybe even the second head, but I don't think we'll go as far as the head. But we'd expect the second shoulder somewhere between the 38.2% fib of that uptrending channel here, or even 61.8% fib of that uptrending channel. So this is what we're trading. We're trading the tractions towards the cycle translation line that's over here, confirmed cycle translation of 4 hours. because we believe that this currently is supporting the upward trend until you see that shoulder. Okay, before then this analysis kind of speculates or considers on speculation basis that the shoulder will be formed here. This is actually that's it. As UBC to test the next manager. But I believe the shoulders are studying this over the weekend again, and I believe the shoulder will go higher. As far as 4. When we get time, we still have this corrected. Alright, so we're going to have a higher shoulder, and the whole pattern will give us the higher shoulder before we retest that neckline. Okay, so what has actually been happening is that I think price recorded something like 3. We are currently bouncing above the cycle translation support at 311 and 312, exactly at the cycle translation support. Okay, so we would want to buy, and this is the current price action. We did, of course, like I said, cycle translation support 311. Okay, that's it here. Cycle translation support is 312. Right. Alright, so we did even 300 and 307. Okay, we are still correcting. According to our analysis, the point of 1 here. Okay, and we won. Alright, we expect to bounce as this cycle transition to go, like I've been saying. 311, of course, we can spike below it. We did apparently at 307. We'd rather wait for a reversal before engaging 311 again. Since we've seen these lows now, 308. Since we've seen these lows now, 308, and even whereabouts at 307. Okay, and we have negative momentum on the daily, on the hourly chart. Alright, I see. Then we will do one of two things. We can either, okay, buy at the top of one line, alright, and then we put this right about here. 5 and 304 and 306. When one wave 1 here has been conceded, market has moved below it, we go to the next level. This is just a matter of testing cycle. So we would consider to start buying at 3.04, that point here. That's what we took it up. Okay. So when one of our level is conceded, we do not disregard the old analysis to test the next top of wave 1, and we're looking at that 3.035. So we can do one of two things. We can consider to start long at this level, entry at this level, or we can, for confirmation purposes, because we have here a spike in oversold momentum, go down to the 15-minute chart and wait for this continuation momentum here. Of course, we don't need to just have one spiking histogram line above oversold. We need to have something more continuous. By that time, we will be able to evaluate the extent of the correction that it has completed, unfolded or grouped into 5 stages, right? Like for instance, here's 1, 2, 3, we are about to do. This is our 5-stage correction. So we expect something higher. So if this becomes positive, alright, before we reach 3.035, then we would consider to start longing the commodity for our pivot levels that are shown here. So we would, on reversal of course, like I've been saying, we do one of two things. We would things. We will change that to 3.035, or wait for confirmation on the 15 minutes and enter on the new value that goes with that confirmation. After that confirmation, it will still probably against 3.11 because we'll at least have taken out that level. Okay, so we'll probably still enter at 11, but our risk will have become determined. You will know that you're risking between 3.11 and 3.8, definitely, so it's even better. We need that, okay? Our risk will have become determined. According to our analysis here, our stop should be below 2, of course, naturally, so even if we go to top of 1 at 3.03, you should get to see that. Alright, like just we saw on the live chart, our stops are all completely below the cycle transition line. This is the main rule. Okay, you don't even need to remember 1 and 2, you just need to place that below the action of the cycle transition line, which takes us to 3. Okay, and our first target is the higher boundary of the Elliott channel at 3.26. Okay, so it's quite lucrative and interesting, and we would want to, definitely, they will devalue the dollar even after the election, and of course all commodities will be re-evaluated in value against the dollar, they will rise. Alright, also we're entering, of course, 3.10, that's the level. 3 is a very interesting level because it is just above the breakout low for the week. The breakout low for the week here is 3.03. Oh, sorry, 3.0216. Okay, so 3.03 is a very interesting level to enter in. Okay, excellent. You could leave buy entries there, like we just saw on the live chart, and it is of course above our stop. 16 is the open for the month. Okay, if we leave a stop at 3.2, it is below the open for the month. Okay, I don't want to waste more time on this issue. Okay, we'll move on to the majors. We'll take some questions first. So there's a question regarding euro dollar. We're about to do that right now. Okay, and then there is a question regarding United States dollar. That gold is going down against the United States dollar, copper is going down, silver is going down, nickel is going down. All the measures are currently correcting against the United States dollar. According to my personal belief, this is my opinion, it could be totally wrong. This is because the central bank, the Federal Reserve, is strengthening the dollar before the coming elections. At the bank, they would call that a crisis, a fundamental crisis breakout. Alright, so they would want to be prepared for it and safeguard price stability. So I would probably, maybe I'm wrong, but I would expect they could start selling gold, or dispensing gold. Simply means they're selling remember that package, the stimulus package that was supposed to be issued in Washington before the elections has ground to a halt. It will no longer be issued before the election probably, and the bank understands, the Federal Reserve understands that after the election, whether we have a Democratic or Republican president, there will be a very strong stimulus package issued. The Democrats are at least going to issue 4 trillion. Alright, they are more conservative physically, but I don't think they will be able to issue stimulus. So this will weaken the dollar, and if the central bank works now before the election on strengthening the dollar, then the strength that is at 1,900, alright, and the dollar goes on to strengthen until gold is 1,860. Then after the election, when there's the issue of a lot of stimulus, and gold again shoots up to 1,970. So the central bank that always says that the issue of the stimulus has not impacted gold, has not impacted the value of the dollar aggressively, because the dollar 30 before the issue of stimulus. So this is how to balance the books, and this is how, of course, to support the dollar as a commodity, or support the dollar on the longer term. Alright, so you would expect the dollar to go up, all the way up to the US elections. This is an answer to the question, dollar up or down. The dollar will continue to strengthen all the way up, so that when you have bad results, not bad, if you have indecisive results on the election, and there's problems with the dollar and equity, there is room for the dollar to fold in. Alright, so you would expect the dollar to go up this week, right up to election week, probably. The Federal Reserve will support this, and we have to take this into consideration, either by selling gold with the Federal Reserve, or beginning to buy into the other measures' weakness on the belief that they will go up. It goes for sterling against the United States dollar, euro against the United States dollar, and of course the yen against the United States dollar. Alright, so for the time being, the dollar, in answer again to your question, the dollar will be up, I do expect, until the US election probably. And then it's really depends on not the results, in as much as whether we have a smooth election, or we have problems, okay, with the results. And you must have also read, of course, and heard about all this, who will concede and who will not concede, and if it will be a landslide victory, or we still need to see that. Therefore, regarding the elections, I've seen many people. Okay, so it's very difficult to trade the event itself, very risky, very volatile, of course, everyone knows this. It's more profitable to trade the result. The result becomes apparent, probably 75% after most of the states, most of the electoral votes have been unfolded, and you know the result. So it's more profitable result, okay, and not to pay the volatility itself. There's going to be a lot of whipsaws up and down, and it's better to trade the result. That's my take on it, of course. Alright, so then there's another question regarding the United States dollar against the sterling dollar against the United States dollar, if it's going up or down. Alright, we could do that now. And the Japanese yen. There's a question regarding the Japanese yen. Well, I'm not sure I correctly understand the question, so if you resend it in the letter, the question says, what's the best own that will sell or buy? You probably mean what's the best currency that you can buy? Okay, so I'm not sure, you should rephrase the question please and resend it, but I would sell the dollar against the yen heavily. Okay, I don't believe the yen will be moving against other issues like the dollar. So probably the OC, Australian dollar, will be falling against the yen in this corona pandemic. Corona. Apart from the dollar and the rupee, fundamentally speaking, I don't think anything else will be going down against the yen as aggressively as these two. Of course, when I will look at that, the yen against the United States dollar, in short, we're accumulating a massive sell of US dollar into yen. I expect something similar will be doing with the commodity currencies against the yen, but we're not getting the specific idea. If you would like to indulge on your question, that would be appreciated. Okay, so we're back to Final question: United States dollar against the euro against the United States dollar. We're just about to do that. Is it a buy or sell? We're buying into that. All right, we're buying into that because we believe it's consolidating. Okay, so if it's not a sell, you could sell it, but we'd rather sell the sterling. The sterling is moving faster than the euro against the United States dollar. The fundamental sell, so that you know, we check. With the current breakout in Corona, the second, we just did that in the fundamentals when we were rounding up the fundamentals. They have now 50,000 cases per day in France, and there is lockdown in Spain after 11 p.m. This is of course having negative impact on the euro, but I believe all this negative impact is just corrective and will take us here. Okay, so this is what we're seeing. This is the current market action, almost the current market action, rounded up on the 4 hours. All right, and just to remind ourselves, remember that we did a wave 5 higher. This is again the 4 hours, and we did an A. Now that is an A up. All right, correction B. This is corrective wave that should contest, technically speaking, the last high made on the market. Okay, so we have a correction. We believe we should buy into that correction. Of course, because of Corona and because of gold is also going down and the dollar is going up, and because of the current dollar strength supported by the Federal Reserve, but this will not last. Okay, so we could expect that this C here is an A, alright, and then there's an A, B, C, that's a B. And then we're going to see C up all the way up to 1.1990 and 120. Okay, so we would want to buy the second leg of this wave 4 here. This is the 3, and we're having the 4 that should see 1760 and 1.17. 1.1810. Currently the market is doing 1.1815. We were already long this last week, and I believe we filled 1.1790 and 1.1810. Okay, so if you're already long, I would hold on that, alright, the stops at 11650. Alright, if you are not long, you could consider to long. Of course, everyone does his due diligence. And you would, if you are interested, if you levels, test long them by using micros at 1.61810 and 1.1780 and 1.176. Okay, so if we do long this area, our first target will actually be 11930. We will not go all the way to 120 at first. Alright, we expect that just like this, these head and shoulders structures that are showing here, all these cycle, internal cycle, alright, this cycle congestion zone, we will have something similar here at the neckline. So we expect to terminate our entries at 11930. We expect to fall back again to 11850 and even maybe below, and then we will re-long, alright, go again 11950 and 11990, and then there will be a fall back again to the neckline where we can re-long. If it's election time, we can then hold. Right, so our first target, like we just been saying, is 11920 or 11930. This is that target here, 127.2%. Okay, our entries are 11770, 11760, 11750. This would average around 11760, of course, if you hold it 3 minutes. Alright, it makes you about $500 in yield for a risk of $330 in risk of 1.6. This is an intraday trade. If you want to swing trade it, you could hold it all the way through the US election to that level shown here, 120.96, so the countdown to October. Okay, that's as far as it goes. The breakout high for this week is going to be 119.80. We're going for that target 119.20. Alright, and these are entries, what our entries would average at 117.70. Our stop, of course, is right below the band low for the current market here at 116.50. Okay, so to recap on that, we're bullish the euro. Okay, today is a bearish day. Probably tomorrow will be a bearish day, but we will use the current weakness in euro to buy into. This is our take on it. We could be wrong, and you have to do your own due diligence. So you have to take. All right, we would consider to long 1.1810, 1.1780, or 1.1790, or 1.1785, and 1.1760. Our stop is 150 or 1.1650, right about here, right below those spots. We're doing the corrective B before we move higher. The market moves higher to C of the B. Okay, so we would long 1810, 1790, 5 and 1760. Our stop is 1650. That's that level shown here. Okay, and that's the level shown here. Our first target is 1920. We will not go too high because we believe this is going to be congestion. This is an intraday trade. Okay, for swing traders, you could hold it all the way after the election. You probably see 120. To remind ourselves, for long termers, the market, of course, did a full A here, and we're currently doing full B. Alright, I had 119.20 or maybe 119.80 or whereabouts. That would terminate full B. This is that we will see here. Okay, that's 30 here. And then we'll be doing the C. And this is going to be very congested. Okay. Triangular congestion will be below the neckline. Below this neckline is blue. When we get the right fundamentals, probably after the elections, I don't know. This is going to move higher, probably when this corona problem blows over. There will be optimism, and we can then contemplate to break out and a higher degree motive uptrend to 120. Okay? You could consider to be prepared for that, alright, and buy if you're invested in other and you already are making money on the other issues, alright, and you don't want to trade this as a big trade. The levels that you will buy here at 1760 and 1780 probably be the lowest that you're going to see if this analysis is correct, and you could hold all that all the way up to 122 or 123. Probably will hold until the end of the year. Okay, why would we believe we have cycle translation? This is of course a weekly chart, and a cycle translation or weekly chart is a very strong signal. Why would you consider this a cycle translation? Because you have here momentum reversal, you have a strong momentum below that neckline, alright, and that took out that neckline. Okay, this signal. Whereas at the higher upper neckline, there was momentum that drove down price again back below the neckline. And now we have this same signal here, but this time at the higher neckline. This signal here is identical to that, and the last time that occurred, we took out that neckline. So we expect this type of signal now will take out this neckline gradually. Okay, so instead of watching this daily basis, every day in and out, and stressing your nerves, if you enter at the lowest areas, this is 50% almost, you jump in the two necklines, bounce, I'm sorry, no jump, and 50% fib. Okay, so we move on to the next issue. The next issue is the euro against the yen. Okay, so the technical picture now has been updated. Okay, and let's take a look at the technical picture now. We expect, of course, we also anticipate the cycle translation here. It probably answers the question here regarding JPY, what's the best thing to own that will move with or against the JPI. So JPY, I'm sorry, and that will also be the euro. We have the cycle translation axis here. Okay, that line here, that line here is a cycle translation support line that is supporting the cycle's high. How do we know that again? Because we have momentum and the cycle resisted at this cycle inflation support, and then momentum reversed. Now it is positive and the cycles bounce at this support, and even on very strong negative momentum here, okay, the cycle still bounce at this. Okay, so this cycle support, or this supporting axis, leads movement in prices, in the cycle prices in this month, or in the price cycles in this month. Okay, and it has caused the following also, by the way. Now it has caused that we are seeing two heads. This is the update that we are now in the technical picture. Now I have two heads. We are expecting an inverted head and shoulder above this neckline, but we are now confirmed. We'll see why on the trade management chart that we have two. Okay, there's going to be some kind of triangular formation here. Okay, this is the consolidation, very strong consolidation, triangular consolidation, and it will round up into a second head above that cycle. But the current fall in euro against the dollar is termed here, is that should take out 126 and above. And that was complete full C, and then we go up to 125.2. Alright, so for day traders, this is intraday trading, your target is 125.2. Don't go too far. Why 125.2? Because go higher. So you're just striking the top here several times, resisting at 125.2. Okay, so don't be fooled by that value here, 126.5. This is only for swing traders and for if you were going to trade this as an investment trade. Okay, so we could consider to trade this as an investment trade because last long 124. This week we can be long all the way down to 123.50. So that 123.50 is just at the lower boundary, a spike below the lower boundary of that triangle. This, we consider this to be a triangular formation, the dotted line here, the dotted line here. We could of course miss now and we're long there. We're already long at 124. We add to that. If you're not long at 124, then you would wait for the coming one down in weight E. Your stop, of course, is 122.20, right below the complete Elliott, what we perceive to be the complete Elliott uptrending structure. That's the day 1, 2, at 122.4. Our target, like I'm saying, if you're intraday trading, 125.2. Alright? If you're going to swing trade it or treat it as an investment trade, then you would go for this high target. Noise low band and the fluctuation low for the market. This shouldn't be seen at all unless, of course, the trend has reversed. Why would we expect this, of course, to go higher to 126.5? You would want to be invested in it. Remember that the euro is going up against the dollar after the election on a strong stimulus package. Somewhat contained, or at least people have got used to it. So this here is 125.8 or the 1.25. That we're seeing, and where our triangular consolidation is currently forming that we've been talking about. I've been saying we should break higher out. Okay, because it is contained between below or above the oversold and zero. This is an hourly chart, so if you still see 123.70, you would want to engage it. You can still see that spike again. Okay. That will hold until after the elections, and you're going to see hopefully 126.5 and higher. Okay, so we move on to our next issue, and that will be dominated is the United States dollar against the Japanese yen. Okay, we of course treated that fundamental chart several times. Let's go to trade management. Okay, so our trade management is based for our chart. Alright, and on this 4-hour chart we have a very strong negative momentum signal, this signal here. Okay, this is a degree 3 trend, downtrend, degree 3 downtrend. The last time we have this signal, alright, we have a zigzag down, alright, all the way up from 107, I believe, down to 104. Now we have the same signal at 105. If you subtract another 300 points, 400 points, you're going to 110. We have the right fundamentals to go on with it, which are the United States elections. Okay, so you can sell this here now. Any value actually, it's now correcting on dollar strength, so you can get good value. So take a look at live market, and you're going down to 101. Why are you going down to 101? Because of this break, because of this fundamental chart here. There is probability, we cannot be sure. We'll go over it quickly. We have a pennant here, alright, and the last time we had that kind of formation, that is also a pennant, but with a flat base, was during the credit crash when there was a break out of that pennant. It went down to 75. So the credit crash actually affected. So the problem in the equity markets, everybody had to sell the equities, stocks, and the central bank, the Federal Reserve, interfered, injected money to investment banks to go into equities and buy them, support them by buying pressure and bonds. Okay, so if we are going to have an inconclusive election, it will affect the equity market, it will dump US equities. Very negative for equities and the US dollar. And if we have a second outbreak of corona that is strong, it will also be negative for equities because there will be a contraction in economic activity. The central bank will interfere again, the Federal Reserve, and install investment institution to buy equities and open to them swap line. Swap line means such an investment institution can borrow any amount of dollar it wants, hold on to the equities and buy them if the market, or sell them, I'm sorry, if the market improves. Okay, so if this business starts to happen again, there will be a lot of dollars in the market to allow such investment foundations to buy this crisis with the US election result. Okay, and you can see depreciation in the dollar down to our 101 level that we're looking to take profits at. All right, which we have been speaking about. Remember here we said we're going to 101. So this would be stage 1 where we could expect to see 101. Okay, so this may not happen. This is the scenario that may not happen if and Trump concedes the election and everything is smooth. But if it does, we lose nothing if we are already selling at 105.5 and 105.7. Okay, because by that time the market will reverse on us and we go out at probably 3, if that is the scenario. But if it does happen, all right, then you would want to be prepared, and you want to have your money into this scenario, all right, with profit under your belt. Now is the time to enter. Okay, you don't want to enter this on election night. Okay, so like it's now correcting. We have 104.9. We're about to see 105. You go down. If you check on our trade management chart for today, this is what we're seeing. Okay, so what are we seeing? An ending diagonal here. Outline, just a minute. From that chart, yeah. Okay, so we're trying, of course, to break out of it, but that won't happen. We're gonna move into that ending diagonal. We expect sluggishly all the way up to 105 and 105.10. And we would want to sell these bets. Even if we move higher, we would want to sell these bets. We would want to sell these values. Okay, we're selling line here. Okay, we can see all the way up to 105 regarding Corona. If you have a fight going on about who's president and there's no one to take charge of how to handle the Corona crisis, well, how do you expect this will reflect? Okay, so this will impact the US dollar, and we're going around not even to 104, we're going down to 103. 2.5. Alright, this is a 1 hour wave. You see this shoulder here. You can expect this to go all the way up to 105.40. You would still sell. You have no problem. That's the bottom of that. That is 1. So this far. Degree 4 in wave 5 can go all the way up there, and that would then be called the second head, and it's still a sell. It's still a sell signal, very strong sell signal because of that. So we already treated the degree filtering. You still you're still in the cycle. If you spike all the way up to 105 at 0.4, you're still in the cycle. Even better, you're getting very nice and high selling values below the moving average, and you're going to 101.5. Most probably. Everything clicks in like this. And we can't be doing C. So that's going to be a C. It can end here, it can end here, and At the worst case scenario, if we are going to take that into consideration, it can even flat panel. Of course, you're going to see 105.5, this is our first target. And then once we really break out of that panel, alright, our next target is simply 6 and a dollar. We will buy. Okay, if we sell the euro dollar at such levels, we'll probably go nowhere. Very slow movement, very chaotic and choppy movement, and we'll make very little money, if any. Unless at the end of the analysis, repeated, but we are 1.1760, 1.1780, I believe, 1.1790, and 1.1810. Our stop is 1.16. We're going to 119.20, okay, and 119.30. Alright, let's see the analysis. We do realize that we broke, of course, below the cycle support. We repeated that several times. And we failed to move above the cycle support, even though we had a double inverted head and shoulder. We failed at the bottom of group 1 and at the cycle support, and this, of course, okay, the Swiss franc is very strongly supported by the SMB. Okay, so instead of the current trade management, we're seeing the head and shoulders. This is an hourly chart. We could sell right below the neck, okay, but being there is now dollar strength and gold is going down, and there is dollar strength before the election, then we expect to see a second shoulder here to equate at least 61.8% of the highs of these left. So what we will be doing is we will accumulate below the shoulder, half size or less, 40% of our size, and once we see 9150, we will then add by limits 9150, 9160, 9170, even 9180. That will give us about 3 minutes if you're taking 9160, 70, and 80. And when you add these to your level here, right above internal loop 1. Okay, and you are going for 88, I would think, since we're already going into the election now. So you go for 88, it's fine. Down now, it's going down now. I should go down. Yes, silver will be going down, so you should be selling into the current. The market is rising, of course. This is a correction. We expect it to be a correction. And we would want, of course, everyone does his own due diligence. $45. Alright, we are still bearish, yes. There is no change. this, more safety. Okay, and it gives you levels to enter. Then you keep your stop at 25. Or 25.30, I believe we had it at 25.30, 25.20, just to avoid spikes. Okay, so yes, silver is a sell. These are the levels you should try to enter. If you do your own due diligence and are comfortable with entering in the first place, you have 24. Up to 24.65. Our target is 23.30, I believe. Our stop is 25.30. Sorry. Okay, so it prove a good buying opportunity, given that I believe the interest in the ZAR, it's a swap, definitely is much higher than the United States dollar. The gold will be going up and the ZAR will be going up, and it's a good. But we don't need to deal into that now. What we need to say is that you can go every day to the market and buy this CFD, the lowest levels that you have on the chart. If you have pivot levels, you buy the pivot lows, leave your orders there, they will fill, and you should, if your analysis is correct and this is an investment CFD, at the end of the day, see profits. Shouldn't see anything in the red. Okay? You should see profit. Maybe little profit, maybe minimal. Income on the 4 hours. Okay, so all this is a correction to us. You see all the spikes at the 4 hours. Sorry. Alright, and remember that we have cycle translation here. We spoke about that several times. On divergence, we have cleared out of a head and shoulder, inverted head and shoulder position above the neckline, and all the little corrections like these. Of course, we have 129.85. The lowest the market made was 129. It is neutral, but it is about to be bearish because it's about to this then move higher. It may become bearish, of course. Right? It may bounce at this point. Remains to be seen. But really very strong here on 29. So in a sense, essentially you are in essence you're buying the market bottom. Okay. We treated that, of course, several times. If we were buying at 129.28 and 130, which will $300 or 500 points here, and now currently 130, we expect to see 135. Okay, so our targets are even 134.70 and 133.50. We would need to hold on to that strong sterling dollar against the yen.